What is going on, Alpha Hunters? Hope everybody is doing fantastic. As we get ready for the new year's, we welcome in 2024 and say goodbye to 2023. The investing in 2023 is done. So, what I want to do is just kind of go through, give a quick look back, and then look forward to 2024. Kind of some different things I'll be looking for in 2024 and trying to see if we can make the most out of certain opportunities. Now, I actually did make a yearly wrap up video back in 22, or for the year of 22 as we went into 22, but I didn't make one going into the year of 23. Mostly, I don't know why. I would have thought. I can give you a quick highlight. I would have thought that we would have had much more of a bearish rollover. Kind of gone down to lower levels, maybe around the 330 area on the SPY, and then probably started seeing a recovery. But obviously, we never got that, right? We never got that. And kind of the way the year went, tech was extremely strong after the first couple of days in 2023. Very nice, strong rip there on tech. A lot of things actually performed pretty well. And then we got to the financial regional banking issue that we had there in early mid-March, I guess. So yeah, that kind of happened. Fed liquidity injections, a lot of that kind of stuff. They did, I guess, what they're supposed to do. I don't really think that's what they're supposed to do, but they supported the markets. Obviously, they probably saw a lot of issues. We broke out. We broke over this 4,200 level on the SPX, 420 on the SPY. And we made a nice little run. We went on a pretty good little run. It was looking pretty good for, the bearish pullback. Kind of made sense. We got a retest into this very kind of strategic support and resistance area all through this zone. Very quick drop off. And then obviously everybody knows here the last 2 months we have absolutely ripped it. Almost got to all-time highs. Really kind of stalled out there here in the last bit of December. Now, if you also remember back in Q1, Q2, this was when we got a lot of AI craze. I'm going to go to NVIDIA just real quick. This is when NVIDIA, with its earnings back in May, made some major headways here with as far as like AI craze. Just crazy gap up here on this earnings. 26% gap up. Now, that's not to say a 26% gap up is unheard of, but I would say for the most part, it's unheard of for a company that was their size. This was, I believe at the time, like a $750 billion company. So, or a $700 billion company before the gap up. So basically the gap up put it to roughly about $1 trillion. And it's been, kind of messing around with the $1 trillion valuation mark up here. I guess it is currently market cap wise at $1.2 trillion. So yeah, that when NVIDIA's earnings had that go on, that really kind of took hold the AI craze then for the next basically second half of the year, because that happened towards the end of May. So once we kind of got that going, yeah, I mean, it kind of led this huge breakout that we did get on the S&P 500, and people are very optimistic about AI. Now, I do have two things that I think are going to be major factors going into next year. One of them is going to be about consumer. The other one's going to be about over exuberant investing in AI and how much certain tech stocks have just to me overpriced, overvalued. And I do have two separate videos kind of about those, and I actually got the AI one out yesterday, and I wanted to get that one out before I did this yearly wrap up, so I can kind of reference back to that. If you haven't seen those, I would kind of recommend maybe going and checking those out. They'll be in my analysis playlist, and they will be pretty good kind of rundowns for what I expect to kind of happen, going forward, and why I think, probably like the two main things that I'll think will drive a lot of the narrative next year for market performance or underperformance. So let's just see how some things did this year. See the heat map. Heat map did pretty good year to date. Meta was up 188. NVIDIA, yeah, we know, killed it, up 233%. Very strong here. AMD up 123. Let's see, there was another one up here. Palo Alto Networks was up 109%. CRM up 95%. Now, I know that sounds really good for a lot of these, but also remember 2022 was really bad for some of these. Like Meta, still not back at all-time highs. It had a really bad 2022. Tesla had a pretty good year, up 110%. We all know December of 22 was really bad for Tesla, just dropped off the table, but had a pretty good bounce back year this year in 2023. But you can see it wasn't all green, right? We still have quite a bit of red out there. And that's where if you look at certain things, if you look at the RSP, it wasn't the best year, ever for the Ecoid SP 500. We were actually negative, 2 months ago, right at the end of October, and this huge run that we did go on. It actually did get the RSP to up 11.7%. Not to say that's a bad year, but when the SPY, was up. See, how much was the SPY up for the year? Let's see, the SPY was up 24.5%, just over 24% for the year. So the SPY did pretty good, and Qs are up I think over 50%, I believe, on the year. Let's see, we got Qs here up 54% for the year, making a new all-time high right there at the end of the year. So yeah, there is some pretty good things kind of going on out there in the market, but it just seemed to be very centric around that AI kind of story. You can see the Qs really run up there at the kind of when Nvidia led that huge breakout in May. So it's not broad based. We did see a little bit more of that broadening out of the market rally there in the last 2 months. But you know what? It doesn't really matter what we did this past year. What we're going to do this next year. It's always good though to look back and just gain perspective of what was the narrative that drive things. That's one reason why every week I always look back at the week that just closed. What was the market reacting to? So it's always good to know what the market is reacting to. That way, if the market continues to react to certain news events, you'll be ready for them. Or if it starts to change its tone to certain news events, you'd be ready for that as well. So it's always good to just kind of know and look back at what the market was kind of reacting to. Yeah, looking pretty good there. Let's take a look at sector performance for the year, and then we'll sit to talking about 2024. So obviously tech, the best outperformer in the year. Tech up 56%, XLK. Communications up 49.5%. Discretionary is up 39% for the year. Everything else underperformed, right? That's kind of that concentration of big tech kind of leading the way there. Everything else underperformed. Industrials underperformed, but they were up 15.8% on the year. Materials underperformed. Financials and real estate, they were all there about 8 to 10% performance on the year. Healthcare was basically flat on the year. Okay, so healthcare XLV there basically flat, as well as energies, but energies were just barely negative. Staples underperformed, actually negative on the year by 3%. Utilities, the biggest laggard on the year, down 10% on the year. And another thing I would like to actually bring attention to is, this kind of market performance that we've had off of the lows from what was that, October of 2022. We've never seen a market off the lows, off the bottoms of a bear market, back to all-time highs, take as long as this one has taken, right? I started tracking this back in May, June, when we started deviating away from the bear market trends and we started deviating to the, bullish trends. It was kind of staying in line with some of these, new bull market, runs and some of these trends. That's what these green vertical bars kind of represent. Red vertical bars represent bear markets. And we deviated away from the bear markets, continuing with the bull markets. And then we broke the bull market trends basically about right here in September, kind of towards the beginning of September, mid September there, and we broke down. And that's why I have this box of no man's land. Now, definitely wouldn't have seen a monster rally like we've seen over the past 2 months, but it is what it is. And one thing I will say is that a lot of these type of moves, you see these bull markets here. That is kind of what happened with some of these bull markets. They were kind of at this lower end here, and then they just ripped like 3, 4, 5, 6 weeks. They just ripped higher, kind of like what we did here for the past 2 months. But they went and hit all-time highs. We haven't quite hit all-time highs. Now that's in just price wise, right? If you take and adjust the chart for data, if you or dividends, if you adjust the chart for dividends, well, you can see even if you did buy at the highs of December of 2021 or the very first day of 2022 on the SPY, well, we are at all-time highs. You're actually positive on your investment. That's because all the dividends that we've gotten here over the past 2 years. So yeah, I mean, there's been some optimistic things, some positive things. I'm never gonna be one to say if you don't have a long-term approach, or if you just want to buy in every month with whatever reserve amount or whatever money you have left over for that month and buy in and make new investments, then do it. Like, I'm never going to be one to tell you not to do that, because it just works out in the long run, right? But that's boring. It's not really trading. That's just buy and hold investing. And there's nothing wrong with buy and hold investing as long as you know that that's what you want to do. If that's what you are trying to do. But don't get mixed up in what you are trying to accomplish. If you're trying to do buy and hold investing, then don't worry about the day-to-day, don't worry about the trading stuff, right? So yeah, that's all I want to say about that. Anyways, as far as we go into 2024, oh man, I'm going to mess that up. So if I say any more like 2022, 2023, forgive me. I need to adjust myself. But I'm going to look real quick at the MACD and RSI. Now, one reason why I wanted to bring these up is because, well, we are seeing hugely overbought conditions, right? We've seen that here since, going back to the beginning, middle part of November. We've had the RSI kind of pegged out here. And, we've seen the RSI now kind of drop off here. Even as the last week we see the S&P 500, the SPY continue to push a little bit higher. Histogram also kind of saying that. MACD line also kind of saying that. Kind of trying to drop off there. So will we see bullishness when we get to next week, the first few trading days of 24? That is where I don't know. And if you are one that has been paying attention, there's going to be two things I think that are going to drive the narrative next year. Now, this past year, 23, I think a lot of people were looking at a bear market to continue. They expected some kind of credit event. Now, you could say we probably got one back in March with the regional banking issue, but the Fed, Treasury, FDIC was very quick to kind of help support the markets. Now, I didn't really have a great idea of what I was wanting from in the way of bearishness in 23. I was just more of expecting new lows in 23, mostly because that's the way, previous bear markets have kind of worked. We get the bigger rollover that happens a little bit later. And then basically we bottom out. That would have been the bottom, and then we would have been good. That didn't happen this time. Now, you can say there's a few reasons why. Now, and you can say there's a couple of reasons why. And first of them was inflation, right? Coming into 2023, it was around 6.5% or so, wound up dropping off into June all the way down to 3%. And then the second half of the year, basically, it went between about 3% to about 3.5%, 3.7%. So it did pretty good. Dropping off. A lot of people were expecting inflation to see this, another rebound before inflation got back below 4%. Another rebound in the mid fives before it really dropped off. Sure. Sounds logical. All you can do is go off historical trends when we've been in inflationary environments like that, and that was kind of what trends have been like before. But I didn't really see the reason and the rationale that inflation coming down is bullish. I guess per se. A lot of reasons why I don't really think that is because, well, it already kind of was coming down, right? We topped out on inflation all the way back in June of 22. And it had already come down quite a bit by the end of 23. It already come down to about 6.5%. So we got it to come down even more, another 3% lower. That is just kind of where I didn't really see, breaking the downward trend would be bullish or bearish. I just kind of thought it would continue just to decrease. Even if we had a month of uptick, I mean, we'll probably just in the downtrend, right? So I didn't really get the rationale of, inflation coming down is going to be bullish for the stock market, but it is what it is. It doesn't matter. I mean, and that's one reason why I don't care to talk about economics all that much, because we don't trade it. We trade price action. Now, if you had heard any of the kind of economists or even the Federal Reserve people talk, one of the things that they were really surprised about that held up very well throughout 2023 was the jolts. Not jolts, but just the consumer, right? I'm going to go high level here, a little bit more high level. Consumer. The consumer held up very well. Consumer spending held up well. Jobs and employment held up well. And that is where the other video I did make about the consumer kind of comes in, and why that is, and I believe, going to be a narrative and very important to kind of talk about in the beginning parts of 2024, is because we did see a lot of dropping off consumer activity in November, December kind of time frame, right? We saw some of that, really more of like October, November weeks. We haven't gotten December data, but if you remember, one of the things that have been going on for the past couple of years is consumers really hadn't had to worry about paying student loans, right? We haven't had to worry about paying student loans. And that finally came to an end in October. October was the first month where you actually had to pay your student loans that you haven't had to worry about paying since, COVID, the pandemic started. So that started in October, and then we finally started seeing some data in November and December that started to be rather troubling. This is the beginning parts of that data, and one I think that's going to be, probably problematic, especially, in by the end of Q1. If we see selling the beginning part of 2024, there are people that are very nervous about that consumer data. Nobody's talked about it, right? Nobody has talked about it. No bulls have talked about it. No bears have talked about it. I haven't seen anybody talk about it on any news clips, major news outlets or whatever. Nobody's talked about consumers having to pay back student loans and how much the data is saying that the consumers actually cut back spending in November because they were having to pay back student loans. Only 60% of people that should be paying student loans, only 60% of them actually paid their student loans in that first month, in that November time. And then another 2/3 of those student loan borrowers or student loan repayers said they're looking at cutting back on investing. So those two things kind of give you an indication that people are going to be coming out of the economy and coming out of the stock market. I'm not saying that they're going to be selling out of the stock market, not yet, but if we do get that headline that says, such a percentage of people are looking to sell out of certain investments to, help cover their student loan payments, that would be a big one. That would be a big one. So this is going to be a rather interesting one when we get into January, as we get data around the consumer. So this would be one that we could see the market get hit really quick early on. The first week of January, maybe the first couple days, maybe we don't quite see it. Maybe we will see it later on in January. But if you are a big time fund that, that's kind of, that consumer data stuff was kind of worrying. You didn't have any reason to sell out here in the second half of December just because of all the momentum that we had put in since the end of October. So it was like, okay, can we hold off to the beginning of January with the momentum we have in the marketplace? Yeah. And guess what? We didn't really do too much here in the second half of December. We just didn't do a whole lot. If we get into the beginning part of January, we start to see some real bearishness, especially right away. That might have been what it is, because being able to sell in January rather than at the end of December means I can defer my tax payments out another year. All right. So that'll be one narrative that I'll be paying attention to. And February, March, in my perspective, would be a very interesting time period around the consumer data. if we start to see some real hiccups along with that consumer data around consumers, I think a lot of people are going to look very hard at some of the companies that are richly valued, like some of those tech and AI companies. And I think that is where we'll see a lot of bearishness because people are not going to pay a premium at that point in time, and they're going to go to things that are in the IWM, some of those old school businesses, utilities, staples. Those could be some of the best areas for next year. Some of the areas that actually underperformed this past year. So staples, healthcare, utilities, financials. I think financials would be okay actually, no matter what. And so yeah, that'd be what I think probably happens. I think we'll probably see some issues with the consumer, and I think that will probably lead into people getting real about, do they really value certain tech stocks as richly as they do. And I don't think I don't think they're gonna want to be in that boat. Anyways, that's kind of what I want to say to that. But as far as a couple areas I think that look really good, well, if we do see economic downturn, I think one area that'll look really good is going to be GLD or gold. We've looked at this one before. Take a look at gold futures. All right, smacking. This is the all-time high right here. Up at these levels, we breached up over it. Earlier in December, made a run back up to those levels here recently. I don't think it doesn't really matter kind of what happens here, even if it consolidates for a little bit, slowly pushes higher. I think this has been such a long consolidation here that I think we'll just be pushing higher. I think this would be a great opportunity for 2024 is gold. The other one, you can go with silver, SLV, silver trust. I think might not be bad. If you want to go the more futures route, you can go the SI. So I think those two would not be horrible. I would think I would rather go with the GLD and just have exposure to gold. So that's just kind of my perspective on that. And then I would rather have exposure to the IWM and or the RSP as well, and definitely less exposure to the Qs. I would much rather have less exposure to the Qs. I don't want to have exposure to the Qs, mostly because I don't buy into the AI hype as much. Not for investing wise. I like the technology. I think the technology is pretty cool, but I don't buy into that hype. I think the opportunity is going to be much better investing wise in RSP and IWM going forward for now. And this is one that I put this idea out there a couple months ago about being bearish on the Qs and bullish on the IWM. This kind of paired trade. If you don't know how to do paired trade, don't worry about it. Just learn. But this would be a great one to kind of look at, learn from. And it's worked pretty good so far. We did have a little bit of a blow off the top there in November as tech really kind of started leading there in the middle of November, and then it immediately reversed. IWM, RSP kind of started taking over, and it definitely continued well and throughout December. So that's just kind of one way I would rather allocate, especially going forward, because we could see a multi-year pullback here, at least in this pair relationship, going forward. But I wouldn't really want to be investing or trying to put a lot of money into the market right now. I would rather wait and see what happens with the consumer in Q1. I think that will probably be more of an issue. And I think this is going to be one that kind of slowly snowballs throughout the year. Might not even slowly snowball either. It might just continue to persist throughout the year. Because when you're talking about people not being able to pay monthly, or paying monthly into the student loans or into their student loans, I mean, that's just going to be persistent, like for months, until the market and economy just kind of reset to levels without that money in the economy. That's just kind of where I'm at with that. We'll see how long this takes. Do we push a little bit higher next year, early in Q1, then we come back down? Sure, maybe. I would be more interested to see really what happens right away in January, on the first trading day, January 2nd. If a lot of people were sitting here waiting to get to January, that way they didn't have to pay taxes in April and then sell as soon as January opens, and then see how that data comes in on the consumer in January, February, and March. if the consumer just kind of doesn't have the gusto that it had in 2023, like you heard a lot of economists talk about, we're kind of surprised at how well the consumer's doing, but yet nobody's talking about the consumer going into 2024. That has me more concerned that nobody's talking about that, I guess, than really anything else. Other than that, I'd rather just wait. I would rather see what happens in the market. I think we'll probably get a pretty good dip here in the first half of the year. Some people are saying, oh, you know what, first half of the year could be kind of volatile. I don't think a lot of people are understanding really the severity. I think that will probably come in. Alpha hunters really look forward to 2024. That's kind of how I would be positioned. I'd be a little bit more into the RSP. I wouldn't want to have weighting towards big tech. That's why I'd say just kind of stay away from the Qs for now until we got a really big tech pullback, which might happen here over the next 2 years. And then I think another one is gold, especially if we start to have issues in the labor market and consumer. I see more stimulus coming, right? I see more stimulus coming, and that's going to be the other thing. If yields come down, do we see inflation come back in the second half of the year? I think we might, honestly. I think we might, because if we have a bad economic environment, they got to cut rates maybe in Q1, Q2, and then we see those yields come down. Then we see inflation come back in the second half of the year. That could lead to a pretty choppy end of year and into 2025 as we're talking about going higher on rates because inflation's come back. So yeah, it's going to be interesting in 2024 what's going to happen. So I'm just kind of curious, what do you guys think? What are you guys looking forward to watching? Do you think there's anything major coming? All right, Alpha Hunters, have a great New Year's. Talk to y'all in 2024.